Hello and welcome back everyone to this weekly update on the financial market. Yeah, I got a clickbaity title. I will stop trading. That's correct, but only temporary. Why I stopped trading? I stopped trading single stocks for the moment. I have only one position left of a couple of positions I had in the past. We will have a look in this video about the history of my trades, what you can see out of these trades, why I'm stopping trading right now, and how the plan looks like to continue trading single stocks again in the near future. We have a look at the S&P 500 index, US oil, gold, and Bitcoin today, and the remaining single stock I have in my portfolio, OGE Energy Corp, and like I said already, my past history in trades and performance. We have the 100th episode here on YouTube, so I'm proud to still be around producing these videos for myself and for you. So let's have a good start in the video with S&P 500 index on the weekly time frame, like always. Here the S&P 500 index on the weekly time frame, still looking well from a weekly perspective. Higher highs, higher lows so far. The 200-week moving average is aligning currently with this weekly orange uptrend line. The prior all-time high still intact and not tested yet, but like you have seen probably in my last couple of videos, I am expecting that we will see a test in the near future of this level, and from there on maybe even break a bit lower before then the bull trend continues and we are back in the game. Why I'm thinking that, I explained that on detail on the last two videos on my channel, but if we click down to the daily time frame, you can see it in more detail that we broke the 200-day moving average to the downside on a weekly basis. That happened a couple of times in the past, most of the times, and it ended in a corrective move, roughly 20% or more, and 20% from the all-time high right now would bring us all the way down to the 0.618 Fibonacci retracement level of this daily impulse to the upside, and from a time perspective that could well fit with this weekly uptrend line. No guarantees here. Statistically, it seems likely, and from a naked eye perspective, also if you have seen enough charts and past corrective moves, then yeah, it seems pretty logical. Currently we have a nice green daily candle, but it's dangerous to buy such green days if we are below the 200-day moving average and in a downtrend structure from the weekly time frame. Here that was the weekly. We can shortly look back at the weekly time frame. This was a swing low from the weekly. We've seen a higher high, and now we have seen a lower low. That's pretty bearish. For sure we can see a small rally back up, a corrective move, but then I would expect that we soon roll over and continue the overall downtrend. So I'm not willing to get involved in this short bear trend rally. That speaks for these green numbers here for the single stocks. So if you see no breakouts to the upper side, be cautious. These stocks have relative strength, so that should be on your watch list, these kinds of stocks, because if we see someday near the end of this downtrend and change from a downtrend to an uptrend in the broad market, then these stocks will be the first ones to outperform the market, and then I'm willing to get back in single stock trading and trade heavily on these breakouts and continuation patterns again. Hopefully with that we can outperform the market. That's the goal of this trading. Otherwise we could buy and hold an index ETF. If we drop even one time frame lower, we can see the 4 time frame. You can see the lower lows and lower highs in more detail. So that's an absolutely perfect downtrend. I was thinking that this prior weekly low would trigger short-term pullback to the upper side before rolling over, but that was heavy selling volume, and yeah, we have to snap back someday soon. Maybe we'll see here first time a lower low and then higher high at the 4 time frame, but that doesn't mean that the downtrend is over. It's just a small pause. Price moves in waves, remember that. So currently bearish for the S&P 500 index. I started talking about that once we have seen this sideways range breaking to the downside, and that was also the movement where we came back into this range, where I hedged some of my long-term positions in index ETFs and stocks. Pretty happy that I was buying here the hedge, currently in a nice profit with that, even if it's not enough to cover all the losses on my long-term portfolio. But I'm not planning to realize that, so it's not that kind of a problem. And I think I will sell parts of my hedge once we reach the 0.382 Fibonacci retracement level of this leg up, because here's also a chance that price recovers and starts an uptrend from here. Then it's not that worse like I'm expecting right now that the correction can be. Yeah, that's I think all I have to say for the S&P 500 index update. Let's continue with US oil. US oil is currently a pretty hot asset here. We have seen a monthly downtrend line, long lasting, then the first peak above that, corrective phase, long lasting as well, all below this weekly orange downtrend line, covered by the 200-day moving average. So that was all resistance. Then we have seen this MACD divergence, price to MACD divergence. Price was making lower lows while MACD was making higher lows. That speaks often for a breakout to the upper side. We have seen that also. I was trading that as well, but I capitalized, I think it was around these highs here. I capitalized on that trade around the $90 level, I think it was. Later we have seen higher prices, like you can see right now, heavy volume because of geopolitical news. And the question belongs how long these energy prices will stay elevated. That has for sure negative impacts on the S&P 500 index and general stocks. If we drop down to the daily time frame, you can see the uptrend here. We had here a heavy volume candle all the way up to $120 per barrel. That got sold pretty quickly because it was an overreaction. Seen the pullback to the 10-day moving average. From there on, we started rising again. Here I thought we maybe see a lower low, but yeah, we're still in an uptrend if we exclude this extreme peak here. And yeah, here you can see already a higher high, but volume is slowly declining, so hopefully we don't see prices around the $120 level again and start rolling over slowly. Personally not trading this market at the moment. Any news, any tweet from president and so on can have massive impacts on this market, and it's not calculatable for myself. If you drop even one time frame lower to the 4 time frame, you can see currently we have this for our support and resistance zone. In the past it was resistance, now we have peaked a bit above it, retesting that currently, so currently it's support. If that holds and we don't break lower here, I think the likelihood of continuation higher is huger than falling lower, but like I said, wouldn't be willing to trade that right now. yeah, I think that's my view on oil. A little bit indecisive here. For sure, we can rise, we can fall. You can't do anything with that information. I know that, but I don't have a crystal ball. At the moment, it looks bullish from a technical price perspective, and that would speak for rising prices. But yeah, not the market right now to act on, in my opinion. Let's continue with gold. There's the picture a bit clearer. Gold here also starting out at a weekly time frame. We can see after leaving the $2,000 mark behind, that was massive resistance. We went into an uptrend here, printing higher highs followed by higher lows, so an intact uptrend. Then we have seen here the blow off move to 5.5K in price, sharp drop back, then a lower high, now a lower low. So on a weekly perspective, we changed from an uptrend into a downtrend. So yeah, if we only look at the weekly time frame, I would say we will sooner or later test this weekly uptrend again, and from there on start rising again. Not the most beautiful arrow I have ever drawn in, but I think you get the point. But I have to say here the 50-day moving average is holding, week average is holding at the moment pretty well. We had massive buying volume here in that candle, like you can see already how it's shaped. But yeah, the trend structure at the moment is still broken, MACD crossed, not the most bullish view here on the weekly. On the daily time frame, you can see the 50-day moving, a 50-week moving average is also the 200-day moving average, roughly at least. And the daily uptrend is still intact. The secondary is broken. Also, you can see here the structure has changed from higher highs and higher lows to lower highs and lower lows. But yeah, also here price starts to recover. But like I said, with the stock market, if we are in a downtrend, then you got this snapback rallies that can give you the view, oh, the downtrend is over, I have to get back in. But I think caution or behaving cautiously here is key, and don't rush into something before you get clean confirmation. So maybe if we see here and run all the way back to the breakout zone of this secondary uptrend line, then roll over and make a lower low, then it's clear we are continuing lower. But if we see then a higher low and a break above that one, let's draw it in, it's maybe better to understand. If we get price behavior like this and then break above the prior local high, then that could be maybe an entry point where you say we changed again from downtrend to an uptrend, and maybe in combination with a downtrend break, that could get interesting. But otherwise, I would also stay out of active positions here in gold. If we drop one time frame lower, 4 time frame, you can see we're building at the 4 time frame base. So for short term traders, it can still be interesting to go here long. Stop loss maybe below the last swing low, but make sure your risk reward ratio is fine for your trading style. Then let's switch to Bitcoin. Bitcoin against the US dollar, or measured in US dollar, we can see we have here the prior all-time high from 2021. We are right around that level. Historical scene, that was never the worst idea to buy here long-term some Bitcoin. So I'm currently also doing that on a monthly basis because yeah, not sure to catch the lowest point of the movement. So I'm slowly accumulating here long-term shares. Yeah, we went from an uptrend obviously to a downtrend. Here that was a rollover. I was also a bit too hopeful here and was sitting on my trading positions a bit too long. But at the moment we have seen here the retest of this broken uptrend line and the breakdown here at the lower time frame then it was clear, okay, we went from an uptrend to a downtrend. Or you can say head and shoulders formation with a neckline, and that one got broken. But then it was also a bit late and we already lost a good amount of profit here, minus 30% from the all-time high. Wasn't the ideal selling point. That would have been higher after losing the 50-day moving average. Then it would have been only 90%. Yeah, but it's a volatile asset. Because of that, it's not the worst idea to accumulate shares on historical low levels, right, like we have right now. But if the stock market, overall stock market, S&P 500 index, Nasdaq 100, etc., starts declining or continues declining, and I think we will see at some point the last rush, the last sell-off lower, maybe to the 0.618 Fibonacci retracement level, measured from the last 4-year cycle low to the 4-year cycle high. And with that, it would meet perfectly with the monthly uptrend line here and the 200-week moving average. Also, MACD is pretty in the minus area and looks a bit like it's willing to cross to the upper side someday soon. So I think the low is pretty near in Bitcoin. On the daily time frame, you can see the daily downtrend line is still intact, printing lower lows and lower highs. And I'm waiting for the last shakeout here, the last leg lower, hopefully. That we will see then a bottom formation building out, like it has been the case in the past. And the 200-day moving average can near the low over the sideways period, and one day soon break it then to the upper side. That will be the moment where also short-term trading would get interesting for me again, beside the long-term investing and holding. If we drop one time frame lower, the 4-hour time frame, you can see from this flag that it's building to the upper side in an overall downtrend. That flag also broke down again. For sure, it can be possible that we are retesting this daily downtrend for continuing lower, but at the current level, that would be still lower or only a double top at the 4-hour time frame at the moment. I'm not expecting a breakout above that. Yeah, you can bet here on falling prices, but so near at the probably, hopefully, lowest point of this corrective move, I wouldn't short this volatile asset at the moment. Yeah, that's all for these 4 main assets. Now we have a look at my last single stock in the portfolio. OGE Energy Corp on a weekly time frame is an uptrending stock with here a weekly resistance zone that got broken to the upper side, so I got interested in that stock. If we switch to the daily time frame, you can see we have been building out at this weekly resistance zone, a sideways consolidation where the moving averages tightened up. We dipped below, faked out to the downside, came back into the range and broke out to the upper side. That was the moment I got interested in this stock and I decided to go long here the moment we snapped a bit back. First, it seemed like a pretty nice idea. Then we went into paper loss here. Not paper loss, but book loss in this position. And the 50-day moving average luckily held it. So far it looks like an ABC correction, and hopefully we'll see that it continues above that corrective move into the first take a profit level at a 1-to-1 risk reward ratio. At that moment I would sell 50% of the position to take the trade risk free. I already reduced my risk from 100 or nearly 80-90 euros per trade, or roughly 1% of my current account balance, to 0.6% because I place it below the last swing low here of this ABC correction and below the 50-day moving average. I think if we fall below that level, we will continue falling further into that range, and then the trade idea is over. MACD is still at the positive level and seems like it could cross the next couple of days or weeks to the upper side. That would speak for rising prices. Like I said, the last stock I have here with some risk at the Interactive Brokers account. All other trades are closed, and we will now have a look on them, or a broad overview about my last trades and performance. Yeah, welcome to my portfolio log, the self-proclaimed website where I track all my past trades since I started with this Interactive Brokers account in January 2026. The S&P 500 index is the broad index I'm measuring my performance against. We lost from the high to the lowest point 10% and sitting at the moment minus 7% at this index, and I underperformed this index with minus 50% in total drawdown, or minus 1,400 euros. You can see here the equity curve not looking that nice. Like you can see, the past many losses. The last trades I closed mainly have been at least partly winners so far, but I got stopped out also here. Like you can see, my last position we have spoken a couple of minutes ago about is OGE with a risk of 60 euros left in the overall account. And yeah, at the moment the market is not working in my favor. I have a momentum breakout based strategy, so breaking tight consolidations, that breaking out to the upside, or pullbacks into moving average in an intact uptrend, and the first sign of pulling off to the upper side, I am willing to buy that and place my stop loss below the swing low and below the moving average. And yeah, that's not working that well. The best indication for that is my current performance, my last trades in the account. Then, because since I started in January 2026 with that account, the S&P 500 index in the broad stock market went mainly sideways and now is breaking out to the downside heavily. So we are in a downtrend. We lost the 200-day moving average. That's not the right setup surrounding for this strategy. So because of that, I'm pausing now trading, waiting for the market to get more friendly to my strategy, seeing higher highs and higher lows, changing from a downtrend to an uptrend again, and maybe getting even above the 200-day moving average before considering trading breakouts and continuation trades, trend following strategies again. Maybe we'll start off with half of the initial risk I'm taking, so 0.5% instead of 1%. And if the first trades start to work again and getting positive, then I will probably increase my risk again to 1% per trade. But at the moment, my main goal is to preserve capital, don't risk more than necessary if the market conditions are not fitting my trading style. Yeah, if we have a look at the statistics, 5 positive trades, 21 negative trades, a win was taking 70 days in average and a loss 22 days. And yeah, I have an expected return per trade of minus 55 euros or minus 0.59%. That's indeed not very nice. 20% or below 20% win rate. And you can see here how well or bad my strategies worked out: reversals, continuation, and breakout strategy. Breakout strategy worked the best. Probably also good in spotting these, but at the current market environment, it's hard to make money with that. So I'm stopping that right now, and I will keep you updated, still make videos, weekly market update, have a overview, give you an overview of S&P 500 index, US oil, gold, and Bitcoin. And if everything turns bullish to green again, I'm back on with the single stock trading, and you can follow my journey. I hope you found this video useful and interesting also for yourself. The 100th episode, so subscribe to the channel if not yet, and give me a thumbs up if you liked this content so far. Till then, bye bye.